Welcome back to another insightful session with Informed Investor. Today we'll talk about a metal that holds great prominence in India and is recently surging to all-time highs. The love affair with this metal goes beyond the bling. If you're still wondering what I'm talking about, it is gold. Gold in India isn't just a metal or an investment avenue, but an auspicious symbol of wealth and prosperity. The love for gold by Indians is a tale that spans centuries. But did you know India stands as the world's second largest consumer of gold? So anyway, in this video, we will talk about this metal that shines brighter than ever and the recent surge gold has witnessed, making it hit all-time highs. We will ponder upon the different types of investing in gold and the tax implications of such investments. Lastly, we will compare the returns gold has delivered in comparison to other asset classes. Let's begin. You're watching Informed Investor, an initiative by Equentis. Gold has been deeply ingrained in Indian society for thousands of years and holds a special place in the culture and traditions in India, symbolizing wealth, luxury, and lasting value. As we Indians are known to be strong to our traditions, so do our habits of buying gold. But what I'm going to tell you now will surprise you. According to the World Gold Council, Indian households are estimated to have more gold than the reserves held by central banks of major economies. Indian households or people in India have about 25,000 tons or 3 times that of the US, which translates into a staggering $1.5 trillion or equivalent to more than 40% of our GDP. In comparison, the US government has the largest gold reserve of 8,133 tons, followed by Germany at 3,355 tons. In context, India places itself in the top 10 with a gold reserve of 822 metric tons. Now moving on, while people in India have bought gold for various reasons, usually cultural, religious or amid the wedding season, it has found appeal as an investment option as well. Firstly, gold has been the best store of value for the long term, as unlike a few assets, it maintains its value without depreciation throughout the holding period. Moreover, gold investment safeguards savings from currency depreciation, acting as a shield against inflation. Next up is that gold can be easily converted to cash and widely recognized by jewelry dealers worldwide. It can be used as a collateral for loans, making it a highly liquid asset. Traditional investors prefer physical gold due to its secure nature. Additionally, gold tends to appreciate over time, offering consistent returns in the long run. Specific gold investments like non-equity products such as gold fund provide reduced tax or tax exemptions, including advantages in the long-term capital gains. As an asset class, gold has low or negative correlation with other asset classes. Hence, it is helpful in diversifying or hedging your investment portfolio against market volatility. Lastly, when you buy stocks or invest in mutual funds, you need some kind of knowledge of the market and economy to make the right decision. With gold, no such knowledge is needed. It is simple and straightforward, making it easy to invest in for all kinds of investors. Now moving on and discussing the hype around gold and why are gold prices surging. Gold prices have witnessed meteoric rise in the last few weeks and are now shining brighter, hitting an all-time high. Prices have soared and are now trading around the 67,000 levels on the back of various global and domestic factors. Let's discuss these factors now. Firstly, we'll talk about the global factors. The Federal Reserve aggressively hiked interest rates in 2022 and 2023, which dampened the demand as higher interest rates made other investments like US Treasuries attractive, drawing investors to them. However, the anticipation of a rate cut a few months ago and with the recent 50 basis point rate cut on September 18th by the Federal Reserve, it has boosted gold's appeal. Gold is a non-interest bearing asset. So when interest rates are high, the opportunity cost of holding gold compared to other interest bearing assets like bonds is higher. Now, with lower interest rates, it reduces the opportunity cost, making gold a more attractive investment opportunity. Now, gold tends to perform well during periods of economic and geopolitical uncertainty due to its status as a reliable store of value. And with the ongoing Israel-Hamas conflict, it has further provided support to gold. And that's one of the reasons why gold is considered a safe haven, which means when there is economic uncertainty, gold seems as a safe investment with investors seeking refuge in gold stability. The dollar index, which tracks the value of US dollar against a basket of 6 major currencies, has declined around the 100 levels, leading to the decline in the major currency. And since gold is dollar denominated, a weaker dollar makes gold cheaper for international buyers, increasing global demand and pushing up prices. Another supporting factor is the accumulation of gold by central banks as they try to pivot away from the concentration in the US dollar, thereby also diversifying their reserves. And according to the World Gold Council, central banks have been consistently buying gold. Especially the year 2022 and 2023 saw central banks buy over 1,000 tons of gold. Even the first quarter of 2024 has seen central banks buying around 300 tons. What's more interesting is that India's central bank, the RBI, is in the third spot, amassing over 18.5 tons in the first quarter of 2024. Only Turkey and China have bought more gold than India. Now talking about Indian specific factors. The period of September to December marks the peak festive season and the wedding season in India, and one key element throughout the season is gold, as it marks not only an investment but an auspicious symbol of wealth and prosperity. Pre-booking of gold has picked up and the demand is expected to further increase as we head into the festive season. And interestingly, weddings and bridal jewelry generate approximately 50% of annual gold demand in India, showing the prominence and severe demand in India. And ever since the cuts in custom duty from 15% to 6%, along with the ongoing festive season demand, India witnessed its gold imports doubling and hitting record highs of 10.06 billion in the month of August. Lastly, gold holds a separate appeal in India as it fulfills a twin motive: adornment and investment. Gold has been the go-to investment for Indians as it provides relative stability and attracts Indian investors seeking to protect their wealth. While earlier people had limited options for investing in gold, now there are several innovative products which have an exposure to gold. Don't worry, we will discuss this later in detail. All these factors have created a perfect storm for gold prices. The global environment of uncertainty and the local factors of festive demand and an investment appeal have led to a surge in gold buying, pushing prices to new highs. Now let's move to a more interesting concept and explore the different types of investments that can be made in gold. First up, and the most traditional method of investment in gold is in the form of jewelry or gold coins and bars. One of the easiest ways to buy gold is jewelry, but it certainly comes with pros and cons. While gold jewelry is certainly an investment, it also comes with cons such as 10% making charges over and above the gold you purchase, followed by 3% GST. Then comes the inconvenience of storage as it needs to be kept in a bank locker or safely in the locker of your house. And lastly, the purity of gold, which is another major concern. Another alternative of physical gold in the form of jewelry is gold bars and coins, which is far better as there is no making charges, the purity of gold is guaranteed, and the quality is assured by the hallmark. The only drawback are the payment of 3% GST along with the inconvenience and storage. To solve all these problems arrives digital gold. As the name suggests, it is a virtual method of buying and investing in gold without physically holding the gold. Several platforms such as mobile e-wallets like Paytm, broking firms and financial institutions offer investments in digital gold. The pros are that the purity is guaranteed, there are no storage concerns, it offers liquidity, and lastly, investments can be made starting from Rupee 1 onwards. The cons are the payment of 3% GST along with the platform commission since it's bought through an intermediary. Next up is ETF or exchange traded funds, which track the domestic price of physical gold. These are backed by physical gold of high purity and are listed and traded on the exchanges. These investments come with minimal commission or brokerage fees of 0.5 to 1%, and again, the purity is guaranteed and offers liquidity as it is listed on the exchange. And I'm sure you've heard about mutual funds that invest in equity, debt, or a combination of both. But did you know there are also gold mutual funds, that is a category of mutual funds that involve direct or indirect investments in gold. As the gold rates rises, so do these mutual funds as the underlying asset is gold. The cost for these investments range between 0.6% to 1%, which is the expense ratio, a cost that the mutual fund charges for the maintenance of the fund. Now lastly, there is SGBs or sovereign gold bonds, which are government securities issued by the RBI on behalf of the Government of India and serve as one of the best substitutes for physical gold. Since it is backed by the government, SGBs are considered safe and reliable. The best part about this is that they entail a fixed rate of 2.5% interest per annum apart from the appreciation of gold prices during the holding period. It also resolves the hassle of storage charges along with no additional charges or GST. However, these SGBs have a lock-in period of 8 years, but investors can exit it after 5 years from the date of issue. Interestingly, if held for the entire period, it can help investors avail tax benefits as well. Now that we've understood the different types of investment, let's look at the tax implications. According to the provisions of the Income Tax Act, gold is considered a capital asset, and when you sell it, it becomes subject to capital gain tax. The budget 2024 had some very drastic changes and tax implications in a bid to simplify the taxation. Capital assets in general are taxed according to the holding period. So with the new amendments, if you buy gold and sell it within 24 months or 2 years, it is considered as a short-term capital gains. If gold investments are sold after the holding period of 24 months or 2 years, it is considered as a long-term capital gain. Now coming to the taxation part. Long-term capital gains will be taxed at a flat rate of 12.5% without any indexation benefit, whereas short-term capital gains will be added to the taxable income and taxed at the applicable income tax slab rates. For SGBs, the taxation is a little different. The interest element received from SGBs is entirely taxable as per the tax slab. If held until maturity, which is 8 years, the capital gains are completely exempt from taxation, whereas if it is sold before the maturity period of 8 years, it will be taxable as per the above definitions of short-term capital gains or long-term capital gains. Now coming to our last segment, which is where we will look at how gold has performed with the other asset classes. As you can see on the screen, data has been taken for the last 5 years as well as 10 years across asset classes like equity, real estate, and fixed deposits. Among all asset classes, on the 5-year time frame, gold has performed the best with a CAGR return of 15.2% returns, with equity coming closely behind at 14.9% returns. If looked at the higher time frame of 10 years, equity has performed the best with returns of 13.2%, with real estate second at 10%, followed by gold at 9.8%. So there you have it. Now in conclusion, it is important to note that past performances is not necessarily indicative of future results. The investment landscape can change rapidly, and that's where diversification comes in. The financial equivalent of not putting all your eggs in one basket. By spreading your wealth across different asset classes, you create a safety net, ensuring that a downturn in one doesn't drag down your entire portfolio. And that's where gold shines. Its low correlation with other assets like stocks and bonds means that when the market throws a tantrum, gold often remains calm, even offering a safe haven for your hard-earned rupees. By embracing a long-term perspective and spreading your investments wisely, you can navigate the ever-changing market with confidence, ensuring your financial future glitters with success. Having said that, this is me, Rahul, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.